right, guys, this is the TCM podcast. I'm Evan Kassouf, and I'm joined by Mr. Radu Stefu and Parker Judy. So I just want to start things off. If you guys can only invest in one thing for the rest of your life, and you pretty much have to hold it until you retire or whatever, what would it be?
Yeah, thank you for the question, Mr. Kassouf. I will say that it all comes down to the risk appetite of the individual investor. And I will also say that none of the information today is personalized financial advice. With that being said, over the next 10 years, I do believe that the United States will continue to be resilient. Equities are going to continue growing. And the safer investment right now is obviously the S&P 500.
All right, dude. But if you had to pick one stock out of it, so something that if you can't just pick the market, because that is the best investment, the S&P is a beautiful thing. It filters out the companies that aren't performing well. It adds the good ones in. But if you had to pick a single investment that's not a broad portfolio, it could be Bitcoin, gold, land, whatever, what would it be?
Well, here at TCM, we do practice that diversification. We want to diversify our risks. We don't want to have all the risks in one basket. With that being said, would I put all my money in one single stock?
Something that you're so confident in, for the rest of your life.
Okay. So I do believe in growth and innovation and technology. And so I would have to go with NVIDIA, AI is the next secular trend, growth trend. So I think AI, NVIDIA is definitely the best player. What do you think, Mr. Judy?
I think I would have to go with Microsoft just because they have a very diversified set of businesses. So, you're not getting the market diversification, but you're getting some of the operational diversification. I believe they're in tech. I think they're generating cloud revenue now.
Yeah.
Video game industry, everything, operating systems. It's very diversified.
How do you feel about maybe like Linux or Apple sort of jumping into their ecosystem? Because their market share is really high, like 80%. But what if someone made something better, They kind of bank on that all the schools use Microsoft, right?
Yeah.
That's what I was going to say. I think Microsoft has solidified itself as a enterprise staple. So pretty much all the Fortune 500 companies use Microsoft products and all their products. So I don't think there's any player that's going to, completely like disrupt what they're doing right now. But what do you guys think?
Yeah, definitely down the line, I think there could be some changes. Anything could happen, but like you said, probably every enterprise is using Microsoft. It's probably going to take a lot of cost to, kind of just switch a whole operating system. There's a lot that goes into that. So I think for the near term, they're probably safe.
I like that. I have a question about your NVIDIA pick, though.
All right.
Are you comfortable paying like a $3.5 trillion valuation right now for the rest of your life?
That's a great question, Mr. Kassouf. And I will say that we do know that the present value of a stock is based off the future cash flows. So even though the P multiple or whatever multiple you want to use, the EV to EBITDA multiple might be extremely high compared to the historical average, I do believe that based on the cash flows that they're able to produce in the future, that paying a premium is very well justified. And like I said, NVIDIA is going to continue putting up new technology, cutting edge technology. And let's just say I would sleep very well owning NVIDIA.
Okay.
What if the AI narrative, maybe dies down in the future? Maybe there's some more time that's going to go into, adopting
That's a good question.
A lot of that technology.
Yeah. So, doing a bunch of research on different companies and going through like earnings reports and earning calls, I'm seeing a lot of CEOs and executives talking about investing in AI. And so because of that, and because of all the open interest in AI, I do think that AI is here to stay and it's going to disrupt how we do things moving on.
I think part of that question was, do you think it's going to accelerate at the pace it's at now, though? Because if there's any kind of hiccups, I feel like NVIDIA is so bid up right now that it's just an assumption on top of an assumption. That's what you're paying for. Yeah. Like you're assuming AI is going to be big, which it definitely is. Google's doing the quantum computing chips. Everyone's trying to compete. Everyone's dumping money into it. But I remember we were at the Smith investment conference, and there was a guy there that said the actual like end profit that you're getting out of it is only like 5 billion, and companies are investing hundreds of billions, right? So, but I honestly I was gonna go with AMD, NVIDIA. I think that the chip space is definitely the next big thing. Like we're gonna start seeing chips in every single. There already are chips in everything. So
Yep. Well, since we're talking about overvalued stocks, I do have a questions for you guys. So, historically, the PE ratio of the S&P 500 in the last 30 years is around 18 to 19x. Currently, the S&P 500 PE ratio is about 24x. Some might interpret that as some stocks are overvalued, or maybe the market is exuberant right now. So, with that being said, the S&P's around 6,000 right now, which is pretty much all-time highs. And so the question I have for you guys is, do you think that the market is overvalued right now? Would you continue being invested in U.S. equities, or would you take out some profits and maybe have some cash, getting ready to take to invest when there's a dip coming?
right.
I would definitely advise, I would definitely, if they were my investments, I would probably take some profit out.
Yeah.
Absolutely. I mean, you really want to build up those cash reserves for like you said, when the dip does come. I mean, that's when generational wealth can be accumulated, buying great companies for cheap prices. But also, like, I don't know if the S&P 500 PE will kind of go to those historical levels. I think when you see like growth investments have been outperforming value investments for I don't know how many years now.
Yeah.
I think the market is starting to become very narrative driven, like with AI and whatnot. But yeah, that's my take.
Okay, and before Evan, you answer, I want to say this. It was JP Morgan that recently put out an article saying that the S&P over the next 10 years is expected to only generate 4% annualized returns. And small caps and mid caps are expected to outperform growth stocks and large caps. So, yeah, you can go ahead with your answer, Kasuf.
Thank you. I think I kind of agree with that, just because it feels like the market is very full right now. But I think the problem with trying to time the top and get in at lower prices is you never really know when it's going to happen, right? It's almost impossible to know. And if you tried to do that last year, you would have missed out on another 30%. That's true. So last year, 2023, another like 20% run, right? Now we have like a 33% run. So I think a lot of the over exuberance is kind of like a natural thing going on, where people are sort of, the whole world is involved in the stock market is so important, is what I'm saying. Like 401ks are tied to the market. Everything is tied to these stocks doing well, And really, like, if there are any hiccups, people, as GDP grows and the economy grows naturally, stocks go up. As inflation goes, stocks goes up. So there's a lot of reasons just to stay invested. But I do think, like, short term, we're at like a top. But I don't know. It's hard to time.
All right.
What do you think?
So I'd say let's analyze what's actually driving the market. Is it valuations? Is it really good corporate earnings, or is it economic data that's we have CPI, it's finding a bottom at like 3%, which is investors like that. We're also seeing credit spreads are all-time tight, which reflects investors have a
people are basically
outlook.
assuming that nothing can go wrong right now. And I think that can lead to, if there is a hiccup, that can lead to a big drawdown. But, as you said, the data is good. Like the actual path of the economy seems good. Like you have all these, I know like Oppenheimer, a couple of these big banks, they just issued their price targets, S&P 7,000, Everyone thought they were crazy for issuing S&P
7,000 by when?
Oppenheimer, by next year. Yeah, 2025 price target.
Wow.
And everyone thought they were all crazy for issuing, like, there was one bank when the market was at like 4,500, I forget which one. They issued S&P 6,000, and they were right. There was only one. I forget which one.
I believe that was Goldman Sachs. It's so funny because with Goldman Sachs, they said, "Oh, we're gonna get 6,000 by end of year 2024," and JP Morgan said we're gonna get 5,400. And so far, it looks like Goldman Sachs got it right.
There was a lot that said way lower too. Yeah. Like we were not going to go anywhere.
Do you guys think the market's going to be able to keep this up going into the second half of December? I mean, historically, we usually see some second half rallies heading into the next calendar year.
Yeah. I think that due to the the presidential election, I think there's still optimism in the markets, and
Yeah.
we still haven't seen Trump actually take control of the office. And I think in January when he does, I think we're gonna see a quick rally. I don't know what's gonna happen after that, but I am pretty positive in short term.
I would agree. I also think Trump is very inflationary.
Yeah.
Yeah.
And I think that Trump is like, the deficits have to go up. He wants to implement tariffs. He wants to cut corporate taxes and do all this stuff that's very inflationary. And I think stocks are pretty much, everyone's going to keep buying stocks, right? Stocks are the best investment for growing wealth and as an inflation hedge. So I think there's nowhere really else to go besides stocks. So I think it's going to be a great year.
So, like I said before, we're seeing S&P 500 at all-time highs. You know, we're seeing the Bitcoin rally to $100,000. We're seeing gold hit all-time highs, which also means that FOMO is all-time highs in the markets right now.
Yeah.
And we're seeing a lot of retail investors joining the markets. They want to get exposure. So, my question is for you guys, what would you advise a new investor that has no background in finance? What would you tell them
Yeah.
to look out for, and what would you advise them to do?
I think first and foremost, you have to let them know that things aren't always good forever. You know, just because you see charts going up, you know, green candle, that's how they see it. You know, like, oh, if it's going up, I have to buy because it's going to keep going up. You know, a lot of that times that's exit liquidity. So I've been seeing it a lot. I'm a server, and when I go to work, about 3 weeks ago, I walked in and everyone's crowding around one guy's phone and they're all trading meme coins. And I'm like, this is great. You know, I'm glad people are making money, but when the temperature is hot in the room and everything's nice, everything's good, most of the time, and obviously I have no real idea, but it kind of feels like a top signal. I don't know. And things can go on like that way for a long time, right? Like it really can, you know, optimism leads to more optimism, that kind of thing. But I think you just have to really tell people to know where they're at, and you have to diversify some of it. It's so easy just to go, oh, just because, oh, I see this coin going up, I'm just going to buy here my whole bank account. Yeah. Oh, you have 5,000 in your checking account? I'm going to put it all in whatever, Polkadot coin. That's what you have to do, you know? But I think I would just tell people to be careful, you know?
Mr. Parker?
First of all, great question, Radu. I think in a time like this, it's a very important question to be asked. My advice would be to really, educate yourself on risk management techniques. I think when you make significant profit in a market like this where things are going up and it may not make sense, there's a lot of narratives fueling the market right now. I think it's definitely good to take some profits while you're up. Also, I would recommend trading in a tax advantage account if you're maybe not a long-term horizon investor. I think being a long-term investor is probably the best route for a lot of people, just buying indexes, buying some more defensive stocks, just holding that long-term. Don't even look at your portfolio because that's when the mental game kicks in. And, like you said, you see the green candles, you're like, oh, I got to keep buying.
Yeah.
You get fixated on it.
That's a good point because it's so hard to time the market.
Exactly.
You're better off just letting it ride.
Exactly.
There really is no point.
Yeah.
I would say education is super important. Being reliant on yourself is a big edge you can get in the markets, because if you have somebody tell you what to do, you might, someday he might stop giving you signals, and you're gonna be left holding a bag and you don't know what to do with it. So it's very important to understand how the market works yourselves, so that you can make decisions based on what you think is appropriate. With that being said, when your friend tells you he's up 500% from buying
Whatever, meme coins. Yeah.
He wants to get in. So
Yeah.
I don't think he wants to buy the S&P 500 and get a 7% return.
That's true.
So what would you say to that person?
I think it's a good point. Investors are becoming more and more short-term oriented. I don't know the exact numbers, but I remember reading something that, the regular horizon years ago used to be like, people were expecting to hold stocks for like years, couple years more. Now I think the average holding time is like maybe around 6 months. So
Interesting.
I think people are getting very greedy. expecting investments to go up a lot in the short term.
Do you think it's greed, or do you think the risk tolerance is changing?
I think the risk tolerance is probably changing. I think with cryptocurrency kind
Yeah.
of being like it's very volatile, but people are piling in because there's money to be made there for sure. It's very speculative. I think things like that are probably really changing investors' risk profile, as well as the emergence of like growth investing. I mean, valuations are getting more and more stretched, so I think people are probably becoming more accustomed to it.
Do you guys think that a lot of these like flows into crypto and into these like super overvalued stocks, Nvidia, AMD, and whatnot? Do you think a lot of that is people are having trouble building wealth? I think it's hard to build wealth now. Like if you are here in Southern California, a house is $1 million, and average yearly salary is still like 80,000, right? So after expenses, you're pretty much not in a good position to ever buy a house if you have to save up for 10 to 15 years. And I think a lot of that is people are looking to investing or trading as a way to kind of accelerate their progress. And I think that can be a good thing, but that can also be, most people get burned. That's the reality of it. Most of the guys on Reddit, most of the meme coin traders, they get burned eventually,
Yeah.
And that's why it's important to have the knowledge so you can understand market cycles and when it's a good time to be in the market and when it's a good time to be out of the market. Yeah.
What would be a good signal for that though?
Yeah. Well, me personally, I'm a big fan of looking at price action, technical analysis. And I think to really understand when a market cycle is near the peak, you're going to start seeing, more volatility. You're going to start seeing more uncertainty in the markets. You're going to start seeing volume, maybe decrease a little bit. You're going to see the money flowing from, let's say, I don't know, cryptocurrencies into more risk-off assets. So I think you need to be on the lookout for those types of indicators.
Yeah. Also, I think, like you said, it's important to be educated on things like fundamental analysis. Excuse me. You need to be able to look at a company's financial statements, look at their valuation. Can you justify holding this company based on their present value of cash flows?
Right.
Yeah.
I agree.
Yeah. Does a valuation justify their current financial performance? Has your thesis changed? I mean, if your thesis hasn't changed, I mean, things get overvalued, but maybe you don't need to sell. Yep. You really need to form your own opinion based on fundamental analysis.
We already kind of talked about it earlier, but I think that's the beautiful thing about just buying the market and buying the index is that if you buy like the Vanguard S&P ETF, it does all that for you. And I think if you're a retail investor and you're really looking to have your money grow, lower your risk, overall just not, a lot of the problem with trying to trade and stuff and doing crypto is that it takes a lot of your time, right? So you're spending a vast amount of your day trying to learn all these crazy strategies just to end up losing money.
Yeah, I don't have the exact stats, but I actually did see something. The last 2 years, the amount of stocks in the S&P 500 that actually outperformed the S&P 500 was just on a decline. So it's really hard to beat the market. Even some actual professional financial investors can't do it. It's not an easy task. So for most people, it is the way to go.
Yeah, that's a good point. And right now, about 45% of the S&P 500 gains come from the Magnificent Seven stocks, right? We got the tech stocks, Nvidia, Apple, Microsoft, the big ones. And even though the S&P 500 might seem like it's overvalued right now, it's also because those tech stocks have been rallying so much, which is why I think there's still some opportunities out there in other sectors, possibly. Do you guys see any opportunities in any particular sector as of right now, other than tech?
I think I don't really have that big of a analysis to give on it, but I think some energy stocks. I know solar companies really went down after Trump was elected, just because I think Biden has a tax credits for renewable energy companies. It's great companies like First Solar, double-digit revenue growth, trading at like 16 PE. It's like you said, there are opportunities. You really just got to look at the fundamentals.
I wouldn't say I have any specific picks. I've kind of been
a sector you might be bullish over the next 12 months.
over the next 12 months. Honestly, I still like semiconductors, but I think I'm staying away from Nvidia. I'm staying away from all like the high flyers right now.
I think the valuation is detached
The
from
value,
the
it's
book value.
completely detached, not even book value. It's just detached from multiple different realities. It's a reality based off of a reality. We were talking about it earlier. Like there are too many assumptions that are built upon that $3.5 trillion valuation, right? And I think a good analogy for what Nvidia is doing and why they're up so much is Nvidia is like selling the shovels to the miners in the gold rush,
I
right?
think the big appeal for Nvidia is
That's a good one.
yeah. I think the big appeal for Nvidia comes from the potential for them to pretty much take over the world as an AI company, which is why the cash flows in the future are
But they're not-
valued so high.
Remember, they're not an AI company. They're just selling the means to get the AI, you know?
So who else is doing it like them?
There's no dude. They're 88% of the graphics card market, and those graphics cards are the same ones used in like those massive server rooms and those massive,
That's right.
So Nvidia is doing it, and honestly, they've been beating out earnings. But we saw the last 2 quarters, they didn't beat by enough for the market to justify it. And even though the stock's still been going up, I think it's just hard to buy something like Nvidia right now. But at the same time, I think I would have said that when Nvidia was 50% lower. So
If you looked at like a valuation for Nvidia, like their price to earnings growth, it's actually not that outlandish compared to other companies. I mean,
Yeah.
they are growing at crazy speeds. I mean, obviously their valuation is definitely richer than other companies, but you really do need to take into account the growth they've been producing.
Yeah. Do you know what the PE ratio is compared to the historical average for Nvidia?
PE ratio?
Yeah.
I do not.
do you know?
I just think it's higher than the historical average. That's
Definitely.
that's
I
all
mean,
know.
I would definitely say it is.
I mean, have you guys Palantir? They have the
Oh
most
my
absurd
God, yeah.
valuation I've seen because they're like known. They're being seen as like one of the best AI plays in the market
Yeah.
right now. Like are they even doing $1 billion in revenue yet? And they,
No. In revenue, maybe, but their net income is not anywhere near
no,
that.
it's not.
A couple $100 million.
No, they just
They
became
are. No,
profitable.
they're actually. It looks good, and then you look at it's an $80 billion company. You're
I
like,
think the P's like around 400 right now. It's
you actually said
insane.
something that's interesting. It's like a good AI play, right?
Yeah.
I think the market, the big institutional investors are literally seeing it as an AI play.
Yeah.
Do you guys remember Super Microcomputers, SMCI?
Yeah.
They had the whole like problem with their auditing and stuff. All these guys do is sell server racks basically. And that might be over, but I need to look more into it. But from what I understand, their stock went up like, I think like 1,500% or something in like a year.
Yeah.
Let's pull it up. Can you pull it up actually, sir?
I sure can.
I'm interested. But
Jamie?
Super Microcomputer, this was all just people going, okay, they have some AI application, let's buy it, We have to have exposure to it. That's how they think about it. Like we need the exposure,
Yeah, it's really just narratives right now. I mean,
But do you think there's a lot of risk involved with just a narrative driven market? Because we're narrative as in not connected to reality, right?
I
Just
definitely
like
think the margin of safety as of right now, just looking at the P multiples, I think it's very low.
so
That being said, I still would want to have some exposure to the markets. I wouldn't want to be 100% in cash right now.
I agree. Yeah, being 100% cash comes with its own risk too, right?
yeah.
So,
It's like you said earlier, like if you did that last year, you missed out on
yep.
a crazy bull market. Like,
Yeah.
What's the SP, like almost 30%?
33.
Yeah. I mean,
It's insane.
yeah. So, I mean, you don't want to be 100% cash right now unless, your thesis has moved on from your investments.
Tread carefully, I would say, going forward.
Yeah. Thank you so much for listening. This has been Top Down with TCM. We appreciate you guys for listening. Until next time.
Thank you.